back again, guys, and in this particular episode about a continuation series on the crypto space, we'd like to see the three lessons every investor needs to learn from the collapse of FTX. From the previous video, I mentioned these three things. Let me just quickly repeat them before I get into this very interesting article that I read online. The first point is storing your crypto in a wallet is the safest way to protect your investment. Do not store your crypto on exchange platforms. Number two, regulation in the crypto space is likely on the horizon. But guess what? It's really not a bad idea because it will protect you and me as investors or traders within the crypto space. Number three, which is also very critical, not all cryptos are the same. Therefore, prioritize your investment into the crypto space in the most valuable cryptos. Number one, Bitcoin. Number two, Ethereum, because they form the largest share, which is 54 to 55% of the market share of the crypto space. They are much safer, they've been longer in the game, and they're well consolidated. That said and done, allow me to go through this story because it looks very interesting for me. and maybe you can pick a few lessons. So, ready? Let's start. The debacle, I'll just read and I'll comment in the process. So the debacle that ensued last week can trace its roots to an investment, listen to this, to an investment that Binance made in FTX back in 2019. At that time, FTX was a newcomer in the crypto space. And Binance, being a big boy, wanted to promote solidarity, meaning make a couple of bucks in the crypto space. So they invested early on when FTX was just starting. So you hear the story? Binance saw an opportunity in FTX, and since Binance is one of the big exchange platforms in the crypto space, they took advantage of the opportunity, and then they were like, you know what, this looks a brilliant crypto, it looks amazing platform, let's put our money into it. This is in 2019. Okay, eventually FTX grew to the point where they felt Binance's stake in the company wasn't necessary. Again, we go back to the same kind of syndrome that when you're starting, you're desperate. When you make a few bucks, you think now you can compete with the person who made you to become who you are. So in the summer of 2021, FTX bought out Binance's position in order to distance themselves from the competing exchange. So what did they do? They liquidated all the portfolio or the holding of Binance by buying them out for them to exclusively focus separate from their competitor, which is Binance. That's an interesting story. Very interesting. What happened? The buyout, listen to this. So the holding, the Binance's stake in FTX, that all holding was valued at $2.1 billion. And it came in from FTX native tokens. FTX has three components. The first one is FTT. FTT is basically the tokens that fall under the first category of the product within FTX. So that is where the $2.1 billion came from. And it also came from Binance's stable coin, which is Binance USD. USD, not USSD, USD. So this $2.1 billion came from two sources to fund the liquidation and the exit of Binance. It came from the FTT, meaning the tokens for FTX, and Binary USD, which is the stable coin for Binance. Are we together up to there? Great. Let's continue the conversation. Fast forward to a year later. In early November 2022, guys, pretty much these recent couple of weeks, CEO of Binance, Changpeng Zhao, took on Twitter to announce that they will be liquidating their entire FTT holding. What? 1 year later, said they want to liquidate all their holding. This sent a first major tremor through the crypto market. The tweet referenced recent revelations as the reason as to why Binance wanted to exit from FTX. But what could those recent revelations, according to Mr. Changpeng Zhao, the CEO of Binance, be? Because this is what sent the market to a short squeeze. In typical crypto fashion, speculation ensued and the market had a knee-jerk reaction to the news. That's why I told you guys from last week's analysis, we expect a further where we are in the crypto space. Anything that you can do is only a sell. I'll put the link to that video on this video. By the end of this video, I'll put a link description to the analysis that I did last week on the cryptocurrency space for you to be able to really understand where we are. But I do not think that we are going to collapse, guys. Remember that the crypto space, the future of money, crypto is going to be one of the biggest alternatives of money into the future, because the future of money is going to be cashless. And so we cannot really rule the possibility, we cannot really rule that there's a possibility of the cryptos going down and crashing all of them. Nope, that's not what I mean. What I mean is we are still on a sell, but you're getting close to a level where now you can take positions for the long term. Are we together, guys, up to there? Great. Let's continue with the conversation and the story. It seemed that Zhao, meaning Binance's CEO, knew something the rest of the world didn't. A few days later, the cat was out of the bag. Guess what? FTX was going broke, guys. Can you imagine? This is $1 billion enterprise. In less than 5 years, suddenly, all that wealth disappearing to the thin air. After a series of losses in May and June this year, Bankman-Fried allocated at least $4 billion to FTX's trading firm Alameda Research. So because they were going broke, to try and salvage the business, they allocated, the CEO of FTX shifted $4 billion to their trading department, which is a firm called Alameda Research. This $4 billion, this is the biggest blunder they did. The $4 billion came in form of client funds stored on FTX. Guys, remember what I told you? You better store your crypto on a hardware or a digital wallet than on this exchange platform, guys. I told you so. You see what they did? They shifted $4 billion of clients' funds on FTX into the trading firm. So this $4 billion came in form of clients' funds stored in FTX, FTT tokens, remember their tokens, and even shares of Robinhood that FTX CEO purchased back in May this year. Even with the extra injection of cash, Alameda Research was unable to recoup its losses, putting FTX in dire territory. Guys, this is a sad, sad story. This is a sad, sad story, guys. But then again, this is a big boys game. Who is playing who? What is the end game with this? And at least, what benefit does this bring to us as investors? And what confidence will it give to us as investors or traders into the crypto space? I'll finish with that conversation. Follow me closely. It seemed that Zhao knew something the rest of the world didn't. Remember that. Number two, They shifted 4 billion, part of which was clients' funds stored in FTX. Your money, my money. Your crypto, my crypto. So, to cut the story short, Alameda Research, meaning the subsidiary that was focused on the trading part of FTX, tried to recoup. Guys, it was unfortunate, putting FTX in a dire territory. Actually, when you look at the share value, the price value of FTT as at October 27 thereabout was over $20. Right now, guys, we are sitting on a crazy 1.21 to $1.3139 range. Can you imagine such a crash from $20 to $25 range all the way to 1.21 to $1.39 range? And the total volume that has been traded so far is 11,476,343 units. That is the volume. This is sad. I can imagine the position of the FTX CEO right now, a young boy, being bashed all over by senators, governors from different sections of the floor, both Republicans and whatever these other guys. So you can imagine that. You can imagine the position of FTX. Let's continue the conversation. So Binance entered discussions to bail out FTX. But after their due diligence, Binance executives came to the realization that FTX was too far gone. In the aftermath of the news that Binance was no longer interested in buying FTX, the crypto market shed around $250 billion. Crazy. Crazy, guys, crazy. With some cryptocurrencies falling more than 25%, guys, especially the second tier and the third tier of the crypto space. Guys, most of these cryptos are going to be extinct. That's the sad reality. But I can bet on my life savings on either Bitcoin or Ethereum because these have been tested over time in different market cycles, in different rumors. Like Bitcoin, guys, that is a cryptocurrency that can withstand the test of time. I bet on that as a trader and as an investor. In fact, I'm waiting for the lowest points according to the video that I'll share on this presentation, that once we get there, there's a very high probability that the next leg on the crypto space, guys, we're going past $100,000 on Bitcoin, and that will be very short. Not short meaning like today or tomorrow, but it cannot take the same trajectory of 10 years from $100, give or take, to $60,000 where it got in its highest. Are we together up to there? Let's continue. While much remains unknown about the future of FTX, there are a few things that investors should take away from all this. I mentioned them, but the painful, valuable lessons, in summary, to just put it all, first and most importantly, stop storing your current cryptocurrency on exchanges. I told you guys, when you purchase cryptocurrency on an exchange like Binance or Coinbase, you should send these funds to a crypto wallet. This crypto wallet can be a hardware wallet or a digital wallet on your phone. I'll do a next episode about I'll do a next episode. Sorry, guys. I'll do a next episode discussing about crypto wallets. Hardware wallets are some of the most secure forms of holding crypto since they store funds offline without an internet connection. By using digital wallet, you can prevent exchanges. By using such wallets, you can prevent exchanges from using your funds to make their own trades, like what FTX did. Can you imagine you've stored your money in an exchange platform, knowing it is so safe, knowing it's so secure? Unfortunately, behind the scenes, the guys are having a field day in the market with your money, gambling with your money, taking risks, taking positions with your money. Can you imagine that? That's so crazy, guys. That's very, very, very crazy. So, by using your wallet, you can prevent exchanges from using your funds to make their own trades, like what FTX did. In addition, you can protect your crypto from any hacks that could happen. Second to that is crypto will look dramatically different in the future. I told you guys, I told you so. This doesn't mean cryptocurrencies are going away, but events like these set a precedent for government regulation. Could this be engineered, guys? What do you think? Could this be an engineering of the big boys to try and bring regulation into the crypto space, because they can clearly see crypto is on its lowest right now? So they squeeze the market for price to go even more cheaper, bring regulation, and then invest and go big. Could this be a big boys game where they let one one of the crypto platforms collapse for the sake of them introducing regulations that can enable them build this conversation further up? Could it be so? What's your take? Put your take on the comment section below. I'd like to engage you further on this conversation. Let's build this conversation. Let's continue. This doesn't mean cryptocurrencies are going to be going away, but events like this set precedent to government regulation. The state of California has already announced an investigation into FTX that is underway. Gosh, I just feel pity for this entrepreneur, a young boy. I can imagine he's having sleepless nights building a baby into this multi-billion-dollar valuation, and then suddenly you come from $1 billion to $0. Guys, that's crazy. But I hope they'll find mechanisms to revive and resuscitate FTX. I still have confidence in FTX. I still believe something can be done. And if Binance had the capacity to do it, I confidently believe they can do it. Or could it be they are pulling back shortly to give room for FTX to come to the negotiating table while crumbling? Could it be? It's a game. It's a game, guys. Business is a game. But it's a dirty game when investors' money is put on stake. Does it matter to the big boys? Hell no. It's part of the ripple effect. It's part of a few crumbles being let go for the big picture. Guys, this is an interesting story. Let nobody lie to you. This is an interesting story. Multiple senators have voiced their opinion that some sort of legislation is needed to create a regulatory framework that allows for international cooperation and gives consumers greater confidence that their investments are safe. Hopefully, these efforts by governments increase transparency in the market, which is a good thing, and provide more protection for investors. Registration with the government will likely become the norm. Exchanges, stable coins, and even some cryptocurrencies will have to obtain approval, much like the stock market, and provide quarterly reports on holdings and other financial information. So all is not in vain. If we look at it on the bigger picture, it's good an event like this has happened because, guys, guess what? With the government intervention into the crypto space, we're going to have a few things. Number one, we'll have stability. There's so much volatility in the crypto space. Sometimes I get scared. So we'll have stability within the coin space. Number two, it will bring and boost investors' confidence. Why? Because the regulations will put it mandatory that you have to achieve a certain level of qualifications before you can publicly float your coin for people to buy. Do you think that is good? Do you think that makes sense? Drop me a comment on the comment section and let's build the conversation further, guys. Finally, as we finish that, last but not least, the world of crypto offers investors a multitude of possibilities. You can invest in all kinds of cryptocurrencies that offer to solve some sort of problem. Crypto is a good idea, guys. Don't get me wrong. Don't get it twisted. It's a good idea. But we have bad blood in the market, number one. And number two, some of these cryptos need a hell lot of regulation and oversight so that investors like you and me, like others, don't burn their fingers in the market. Let's finish by saying, however, as promising as different cryptos can offer to solve different problems, and as promising as it may sound, things can quickly and oftentimes get worse. To ensure that your portfolio remains protected from any potential black swan event, investors should prioritize holding cryptocurrencies that are clearly head and shoulders above the rest. I told you guys. I told you guys. Cryptocurrencies with large market capitalization like Bitcoin and Ethereum are deemed safer than the rest due to their massive acceptance and trading volumes. Bitcoin is stable, Ethereum is stable. Actually, Bitcoin and Ethereum together, the two make up more than 55% of the value of the entire cryptocurrency asset class. Meaning, out of all this shebang, all these wahalas, out of all these cryptocurrencies, Bitcoin and Ethereum make up 55% of the market share. Which are the best cryptos to place your bets on as an investor other than Bitcoin and Ethereum? Just tell me. Give me your opinion. Let's discuss it. Let's build a conversation, guys. Let's take it this further. Let's dare each other. Let's get deeper into this thing. Otherwise, you will be duped by guys who come and sell you things like, I got this crypto 2 years, 1 month down the line. It has made me 100,000. It has made me 200,000. It doesn't matter. The market is the same. The market is the same animal that has cycles. It has to go up, it has to come down. It's like how an economy works. An economy will have cycles. There's a time the economy is performing good, there's a time the economy is performing bad. So is every asset class, and cryptocurrency is not an exception. If that is the case, then you'd rather place your bets on the safest, strongest cryptocurrencies, which is Bitcoin and Ethereum. Let me get your feedback. Let me hear your thoughts. Let's build the conversation further. Good luck and good luck trading. Have a great week. Cheers, guys. This is crazy. This is damn crazy. It's the best analysis I've done after a very, very long time. Cheers, guys.